Good evening, good afternoon, and good morning from rainy Kuala Lumpur. Welcome to today's AFI webinar on advancing fair competition for inclusive digital finance. My name is Ali Ghiazuddin Mohammed, and I am delighted to serve you as your MC for today's session. We appreciate you joining us from different parts of the world for this important discussion on how competition dynamics shape innovation, consumer choice, and financial inclusion. AFI, through its Competition Enablers Knowledge Exchange workstream, has developed a special report on competition in digital financial services. Today's session aims to disseminate the key findings of the report and facilitate a dialogue on how regulators can promote competition while safeguarding inclusion and innovation. As we move, let me begin with a few housekeeping notes. Can we move to the next slide, please? We encourage active participation. You may use the chat and Q&A function or raise your hand to ask questions or provide intervention during the session. We understand there's a lot of turnout today, so if the moderator is unable to respond to all the questions, we will make sure that we'll get back to you. You can write to us. Please also keep your microphones muted unless you're speaking. For today's webinar, there is interpretation available in French and Spanish. On Zoom, please click the globe icon at the bottom of your screen and then select your preferred language channel. You can also choose to mute the original audio if you prefer to hear only the interpreter. On that note, let's take a group photo to commemorate this session. Kindly turn on your cameras if possible. I would like to invite Emilia from the AFI team to guide us through this group photo. Emilia, over to you, please.
Thank you, Kias. Antia, if you could please unshare your screen and we can give 10 seconds to the rest of our colleagues while they switch on their videos. May I just please ask everyone to keep smiling for the next 10 seconds? All right, we're ready. Okay, thank you, everyone. Over to you, Kias.
Thank you, Emilia. Can we have the presentation back, please? Thank you so much again. I'll take just 10 seconds to go through the agenda. We have a comprehensive and well-curated program for today's session. We'll start with the opening remarks and we will have a detailed presentation of the special report on competition and digital financial services, followed by a panel discussion. And we look forward to your active participation and contribution in this session. So to formally open our session, it is my pleasure to invite Dr. Alfred Hanig, CEO of the Alliance for Financial Inclusion, to deliver the opening remarks. Over to you, Alfred.
Yeah, well, thank you very much, Elias, and for the introduction and the warm welcome. It's indeed really great that I can join you today also in person. We were unsure about the timing, but that works very well. So that's really great. Yeah, AFI members, partners, dear guests, ladies and gentlemen, for me, it's really a pleasure to welcome you to this special event. As Gias has said, we are actually launching today this report, our report, which is called Advancing Fair Competition for Inclusive Digital Finance Insights from Emerging Markets. So this is quite a unique product that has been put together over the past couple of months. Yeah, actually the release of this report now really is the culmination of that hard work that went into the report performed by AFI's Competition Enablers Knowledge Exchange, or in short, the CKEX that has been mentioned by Gias already. Yeah, well, I mean, all of you, I think, are familiar with what CKX is. It's a work stream established in the network in 2024. And we aim to enhance regulators' capacity to promote fair competition in the fast-moving policy area and markets of digital financial services. Now, I mean, the digital story has been written, yeah, and is still continuing to be written. We see that digital technologies have been extremely instrumental in expanding access to finance, reaching to those ones who don't have proper and quality access to financial services. And of course, we also see the role of the digital financial services when it comes to the closing of the gender gap. And really around the world, we have seen a lot of disruption in the space, yeah, because many new market players entered the space, driving digital innovation. And and we are all aware that in the jurisdictions where we work, that the financial sector does not look as it looked before, like a traditional financial sector. It now extends far beyond traditional banks because we have technology companies, we have the fintechs and infrastructure providers, digital platforms, and nowadays even social media firms are forcefully driving financial inclusion, and technology, of course, plays an important role in this. Now, we are also all aware that, yeah, this evolution that is very rapid, yeah, has reshaped how financial services are delivered. And of course, in consequence, regulators must respond, yeah. And in many cases, the entries of these new providers, yeah, has spurred incumbents to innovate, enhance efficiency, and also offer better service, proof of the power of competition to unlock value for consumers and economies. But we, and especially from the regulator side, we are also very aware that digital technologies bring complex new challenges. In particular, regulators must strike, I mean, that's what we always say, strike a balance between creating an enabling environment for competitive digital financial services. In other words, not stifling these developments, but at the same time ensuring financial stability, integrity, and consumer protection, and ultimately limiting risks of technology. So in other words, being open, being proactive, being creative, being enabling, while keeping the risks in check. Now, it is actually in this very context that the CKX has launched a series of initiatives to support regulators in the network in meeting these challenges. And over the past year, I think you have seen a lot of activities. CKX has convened regular technical discussions among AFI members. And one of the highlights I'm aware of was the workshop, the event that was organized by the supervisory authority from Peru, the SBS, who actually hosted member institutions from all over the world for a very meaningful peer exchange on competition enablers. And all these discussions that took place during this past year, as well as a lot of extensive consultations with external stakeholders, that produced the insights which enabled us to produce this report. And the report now indeed reveals that regulators are managing to promote a competitive digital landscape while delivering on their core regulatory mandates. My colleagues have given me one example here, which I think is worth mentioning, how regulators are doing it. Yeah, and here I'm just referring to several member jurisdictions. For example, Tanzania and the West African Monetary Union. They have introduced interoperability frameworks that allow different payment systems to connect seamlessly. By lowering these barriers to entry, encouraging innovation, and expanding consumer choice, these measures are effectively functioning, as we call it, competition enablers. And regulators are now discovering that promoting fair competition is compatible with and indeed serve to advance their existing mandates. But the report goes also beyond that. It also underscores the importance of collaboration. Yeah? As the financial ecosystem grows more and more complex, the engagement between financial, competition and data regulators has become very essential. Yeah. So in other words, the collaboration across regulatory domains, yeah, has become very, very important. And this cross-sector cooperation enhances oversight, promotes consistent policy responses, and ensures a level playing field. But of course, only if collaboration works effectively. Now, I now, before I close, want to extend really this sincere appreciation of the management to all those who have contributed to producing this report. Of course, first of all, the CKX members themselves for their fantastic input, the Digital Financial Services Working Group of AFI, of course, the AFI Management Unit, and last but not least, of course, our consultants at Acacia Economics for their expert analysis and for the drafting. But let me also acknowledge our partners here. The role of the UNCDF has been very instrumental, our technical partner for the CKX workstream, but of course also the Bill and Melinda Gates Foundation, AFI's technical and funding partner on competition and digital financial services, whose encouragement to embark on this initiative and to support has been instrumental in driving this work forward. Maybe we probably felt, all of us felt instinctively that competition is essential, for innovation to translate into inclusion. While we know now more about how that dynamics works, there's still much to learn. So at the recent Global Policy Forum 2025 that took place in Swakopmund in Namibia, our leaders, the leaders from the AFI member institutions, endorsed the work of the Competition Enablers Knowledge Exchange, and they encouraged us to explore this vital topic further. So what we do is really backed up by a proper mandate, and this new report will now guide AFI's upcoming work in this area and should serve both as a practical resource but also as a catalyst for further dialogue among policymakers. What leaves to be said is just that I encourage everyone to read the report, digest it, to reflect on how its findings can be applied through smart policy, of course, in a way that it is, of course, also compliant with the local conditions. And while I cannot join you in person today, I can at least wish you all the best. I have seen, when I just looked at the names here, there are, for me at least, a couple of familiar faces around the table, so I'm pretty sure that you are going to have a great session today. And we all, I think, follow the same objective here as we work to achieve inclusive and sustainable growth through fair, competitive, and innovative financial systems. Thank you very much. Thanks for inviting me, for leaving you with a few remarks, and I hope you enjoy the rest of the discussions. Back to you, Gias. Thank you very much.
Thank you. Thank you very much, Dr. Hanig, for those insightful reflections and for framing today's discussion so clearly. And with your encouragement and support, let's look at the special report. Shall we move to the next slide, please? A very quick timeline of how things evolved with the competition work at AFI. We started this work in 2023 by running a network-wide survey to understand policy makers' perspective on competition and digital financial inclusion. The survey findings indicated a strong agreement on the pivotal role central banks and financial supervisors play in shaping the competitive landscape of the financial sector and in advancing financial inclusion. With this clear mandate, we grouped together 14 interested member countries and established technical partnership with the UNCDF to set up a competition enablers knowledge exchange, or CKX as we call it. This is to leverage expertise of our member regulators as well as strategic partners to address the complexities of competition in digital financial services and foster a more inclusive financial ecosystem. We had series of physical and virtual technical meetings to discuss various aspects related to competition, to bring forth diverse country perspectives and examples, and to showcase ongoing research. We ran capacity building programs, leadership dialogues and roundtables, and other strategic initiatives under the CKX umbrella. The special report that we are going to disseminate today is a result of all the work that took place under the CKX umbrella over the past 18 months. We have talked a lot about the report. Let's see what the report is. Let's move to the next slide. I encourage all the participants to scan the QR, and my colleague Adiemi and others have also posted a copy, a link to the copy of the report in the chat. So please have a look at this. Maybe we take a few seconds for you to scan the report and also copy the URL link if you're unable to scan. And take your time to review the report. It has diverse perspectives and talks to competition from various thematic areas and its linkages to financial inclusion. Great. Hope you were able to scan or copy the report link. Let's move. Let's discuss the presentation overview now. And I'll invite my colleague Anthea Pailo. She's a policy expert, competition and financial inclusion at AFI, and she will facilitate this session to take us through the report. Just a brief about Anthea. Dr. Anthea Pailo is an economist with a decade of experience in competition economics, economic regulation, and financial sector development across East and Southern Africa. Currently, she's serving as policy expert for competition and financial inclusion at AFI. She leads the CKX work with AFI. Previously, she was working with the financial sector development, deepening Uganda. She holds a PhD in economics and is a certified digital finance practitioner. Over to you, Anthea. Thank you.
Thank you so much, Gias. And thank you so much, Dr. Alfred, for your opening remarks. Good morning, good afternoon, good evening to everyone. Such a pleasure to be able to host all of you and to be able to present this report to you. I wanted to first share a little bit about the report and how we've been able to conduct it and bring it forth to you. This was very much at the heart of the needs of the members themselves. We listened to what the members were saying, what the members were interested in terms of the challenges and concerns that were being experienced, whether it was high prices, whether it was difficulty in terms of the quality of the products and services within the market, difficulties in terms of negotiations and discussions with providers in their markets, discussions around licensing and innovation. And there was all of this discussion that allowed us to sit down and think, how can we provide support to our members? As mentioned, with the support from our funders and from our technical partners, we realized that one key area that had not been explored previously was how competition affects financial inclusion. And so in order to build the awareness of the members, our CKX members, and also the rest of AFI and financial regulators, we thought, let us provide an initial document, an initial special report that kind of provides key guidelines as to how to understand the issue of competition, the key competition bottlenecks that keep arising, and how different regulators are responding to these challenges that they're experiencing. In order to conduct the report, one of the key things that we did was that we did a comprehensive literature review. We also sat down and we had interviews, first of all, with the Competition Enablers Knowledge Exchange members. We also had interviews with external stakeholders. Some of you may be present here, in order to understand the landscape and to be able to bring to the members and to bring to you a very much updated understanding of how competition affects financial inclusion. We were very privileged to be guided through this process by Akasha Economics, that is very experienced in this field. And that brings me to the introduction of our presenter, who's going to be able to discuss with us and share with us a little bit about what's happening about the report itself, to give you a key overview, just a little bit, because we would really want for you to be able to read through, understand, and get all the key examples from them. So just briefly, I want to introduce to you Shaista Goga, who's the director and one of the co-founders of Akasha Economics. She's an economist with a focus on microeconomic policy, competition and economic regulation. She holds a Master of Philosophy in Economics from the University of Oxford, where she was a Rhodes Scholar. She has provided advice on competition to various companies, regulators, and multilateral institutions in different industries, including telecommunications, publishing, and agriculture. She's also contributed to the development and implementation of competition policy, has been active in training in competition, and is a part-time member at the Competition Tribunal in South Africa. Thank you so much, Shaista, for joining, and you're welcome to take over and share with us the findings from the report.
Thank you, Anthea. I'd like to start off by thanking Anthea, Giyaz, the rest of the AFI team, as well as the members of the Competition Knowledge Exchange for the sort of time and insights that you've put into this report. Anthea, you can go on to the next slide. So this is a very lengthy report that covers a lot of different aspects. So I'm going to go quite briefly at a high level through the first few slides and then really sort of dig into the bulk of the presentation. So I think, the team has spoken a little about why the special report on competition. But I think ultimately we've found that there's been a rapid rise in digital financial services, but that this has in some markets and in some instances been accompanied by market concentration and dominance. So since abuse of dominance sometimes can limit innovation and harm consumers, we tried to go into a little bit more detail as to what the enablers and inhibitors of competition have been. And this report just highlights a few aspects of this. Anthea, if you can go on to the next one. So I think the introduction of digitalization and advances in technology over the last decade has led to evolution in various areas. One is the type of institutions that can provide financial products. This has moved on from being simply banks, often with a very big bricks and mortar footprint, to institutions such as telecommunications companies that have mobile money, fintech companies, and even in some instances, companies such as e-commerce companies. So there's a very wide range of institutions that are now interested in providing financial products. This is also backed by changes in how these products are developed and what provides a value add, such as the data available that underlines it. And this has changed what makes a product a good product and changed the dynamics of the market. The physical location of services has changed from being something that requires a physical footprint to being something that's accessible on a mobile phone or on a computer. And there's also been changes in the technology and the rails and infrastructure that support it. And this has all brought down the costs associated with provision significantly. So all of this has meant that the competitive dynamics in digital financial markets has changed substantially. So the first part of our report mapped digital financial services and the evolution. And I won't say too much about this, except that there have been various changes and developments that differ across country contexts. And this depends on a lot of the underlying factors. Of importance is the regulatory and legislative framework underlying each country and how the legislation and the policies around entry, licensing, and other things have been developed has impacted on how the market has evolved. But there are a lot of other factors, from consumer ease and use of technology to access to products to the underlying infrastructure. So we find that in each country, we have a very different development of digital financial services. Next slide. And this has led to different models, but I think the three main ones that we looked at in the course of this project have been telco-led products, such as mobile money, bank-led or neo-led products, including digital banks, hybrid banks, and agent banking, and then platform-led products. So this includes things such as WePay, where there's sort of digital ecosystems that are led by a tech platform. So onto the next slide. we see that digital financial services has various impacts on the competitive environment. And if we go to the next slide, we can see that there's competition enhancing effects of digital financial services. I mean, the main impact of competition more generally beyond digital financial services is that it acts as a discipline. It creates reduced prices, often leads to improved quality and customer experiences, access, and innovation. So I think overall, we all are aware of the benefits that it's had. But there have been some challenges to competition within this market. And in the report, we go on to this. Next slide. So competition has failed in various ways within digital financial services markets. And often competition is problematic where there's market power or the ability for prices to be raised above the competitive level. But it can also be poorer quality and the ability to sort of a stagnation in the market. And this often results where there's market failure and barriers to entry. So there are three key barriers to expansion and entry in a market that are typically looked at. The first is structural, the second is strategic, and the third is regulatory. So we've delved into each of these in a bit more detail. So the first type of barriers to entry and expansion that exists more generally, but in digital financial services, are structural barriers. And these are barriers that exist due to the structure of the market. And it's not through the behavior of any particular player in the market, but it's just sort of how the market evolves. So one of these is economies of scale, where the more scale you have in a market, the lower your costs. There's economies of scope, which is the more products you have in the market, the lower the costs. Network effects, which means that the more you have users using the product, the more attractive it is to new users, which sometimes tips the market towards dominance. There's sunk costs, which include the high cost of entering a market, switching costs, which are the costs of changing from one product to another, which can lead to consumer lethargy in moving across, and information asymmetries between consumers and producers. So if you go on to the next slide, we came across various examples of structural barriers within all of these kinds of, with all these kinds of market failures. So two that came out quite strongly, I'm going to discuss in a bit more detail. The first was the impact of network effects. So as I mentioned, network effects typically occur when the value to a consumer of the product depends on who else has access to it. And this is something that has become quite important in digital financial services, because if I, for example, want to sort of subscribe to a payment product, the use of it depends on which of my networks, the sort of people that I want to pay, have access to the product and which merchants accept it. So what we found historically is that this can often be a barrier to new entrants, because the first to launch or the first to reach critical mass often attracts more and more users. And when a new entrant comes in, it's a significant barrier to sort of overcome to be able to engage in this market. So we found this in mobile money, where MNOs that were the first to launch often built up a critical mass because people wanted to be part of the same network that their sort of networks were on and other payers were on. So where there's a lack of interoperability across different networks, you often find a sort of growing dominance, and it becomes more and more difficult for people to enter the market. Even if there is interoperability, this can also be affected by differences in your pricing. So on-net versus off-net pricing have sort of made a difference in this market as well. We find this in cards as well. In some of the markets that we examined, Visa and MasterCard was widely accepted by merchants and internationally. So customers wanted them because they could buy subscriptions and other forms of, so they could sort of engage in their subscriptions and use it when they were traveling. So where customers want to acquire these cards, it becomes harder for competitors such as national card systems to access this market, where merchants are sort of hesitant to invest in systems that to invest in systems where there's other competitors that are established. So that's network effects, and it can be sometimes challenging for new entrants to surpass. The other issue is switching costs. So for example, payment contacts sometimes take a long time to load. And so if you're going to switch from one bank to another or from one product to another, there are costs in terms of your time as well. So there's often a potential for lock-in. And in the data economy, this has become exacerbated where data becomes part of the input. So if you have historical data that you've built up over time, either with a financial institution or across different institutions managed by that company, so maybe your telecoms information or your e-commerce information, they're able to provide better tailored products because there's enough data to manage risks. And then switching between providers becomes more difficult because you lose that history and that data. There's also psychological and behavioral factors related to switching, such as trust and financial literacy. But overall, these are some of the issues and the barriers that inhibit competition within a market from a structural perspective. The second category of barriers that we've looked at were regulatory barriers. So I'm going to note three. One is licensing barriers. The second is barriers to accessing infrastructure and facilities, such as platforms. And the third is disproportionate compliance burdens. If we can just go on to the next slide, I'll discuss this in a bit more detail. So with licensing requirements, there's often limits on the types of companies that are able to get licensed and compete in the market. So for example, only banks are sometimes able to operate certain platforms. And in some markets, EMIs and non-banks need to partner with a licensed bank. And this makes absolute sense in a lot of markets. You know, you've got to balance the different risks. But sometimes, depending on how licensing requirements are written and developed, this can limit competition in the market. And this is particularly when behavioral aspects come into it. So I think licensing requirements and how licensing is structured is one of the key areas that has created development in the markets and has sort of differentiated between markets in which there's been a lot of entry and more innovation and those where there have been less. Other regulatory barriers, for example, are KYC requirements, which limit the ability to offer products to underserved customers. If you can just go one forward to the next slide. If you can go one back, sorry. The last one is barriers to accessing infrastructure and facilities. And this is another regulatory barrier that has occurred. So you might have regulations and legal requirements on which firms can access certain facilities and platforms. And this may be the case for something such as a national switch or a database, an identity database. And these barriers, while they also, again, are often very sensible reasons as to why they're enacted, can inhibit entry and expansion. So if you can just go two forward, please, Anthea. So those are some of the regulatory barriers or the types of regulatory barriers. And then we have the third type that we came across, which were barriers to entry and expansion that were strategic and behavioral. And this included behavior such as predatory pricing or pricing below costs by dominant firms or firms that were incumbent in the market, margin squeeze where companies charged higher levels for wholesale services to their wholesale customers and lower prices on the retail market where they competed, tying or bundling products and services, exclusive dealing, refusing to supply, pricing, and collusion. So if you go on to the next slide, we looked at some examples of this that do occur in markets. And we developed sort of three main categories of this that are sort of relevant to DFS. The first relates to pricing and exploitative pricing. And the one category of regulatory interventions and competition challenges that occurred is in relation to the pricing of interchange and merchant discount rates. So I probably don't need to explain to all of you, but interchange is the process by which banks facilitate acceptance, collection, exchange, and clearance and settlement of payment instructions. And often interchange fees are paid by the banks and they're unseen by the customers. So this has led to a situation in which payment providers historically have often charged high prices, sometimes excessive prices for interchange or for merchant discount rates. So this has been one of the areas where there's been quite a bit of regulatory intervention due to sort of competition problem or sort of market power. And this has been scrutinized by authorities in various jurisdictions, including the European Union and the UK, and it's often regulated. And in digital financial services, this is also something that has come to the fore. And the pricing of interchange and merchant discount rates on platforms is something that is of importance to how the platforms develop and and sort of how prices work. So we see that in sort of some jurisdictions, the way that platforms are set up and the way that pricing has been done has meant that they expand at a better rate. The second sort of broader area, one back still, is to do with, one slide back, the pricing of wholesale inputs. And in many of the countries we looked at, this was a second area of competition where there were bottlenecks to competition. So often wholesale inputs are required in order to provide your retail input. And in mobile money in particular, USSD channels and mobile network access is of pivotal importance for fintech services. And in many developing markets, fintechs and banks rely on USSD and SMS to confirm transactions. But often mobile operators, sometimes with mobile money, control the USSD gateway. So there have been challenges with the pricing of USSD in certain countries. And this, I'm going to just use the example of Kenya, where there was an inquiry into this. Next slide. So the next type of behavior that has been problematic is exclusionary behavior. So one is preventing access to platforms that can be used as technical infrastructure. And here sometimes we get the sort of interplay between tech companies and digital financial services. So one that came up in India was that of Google Pay, and there was a case by the Competition Commission of India related to this. Where Google required that companies that listed on their store used Google Pay as a payment processor. And so this was something that was seen as a bottleneck to competition. Similarly, in Europe, Apple Pay restricted access to its near-field communication. Apple devices restricted access to near-field communication to companies, allowing only Apple Pay to have that access. So this, again, is sort of preventing access to platforms that can be used as technical infrastructure. The same has been true. I'll come back to that. Then exclusive dealing was a problem in some instances, particularly with agent networks. And there have been regulatory interventions to prevent exclusivity in agent networks. A third is interoperability. And in some countries and in some instances, there's been a refusal for platforms to interoperate with each other or for payment systems to interoperate with each other. One of the examples is Alipay and WeChat, where they sort of had different ecosystems that developed, and they were sort of forced to interoperate with each other. But we find this occurring as well in a lot of other payment systems, and this is something we'll come back to when we look at the regulatory interventions. There have also been issues where there's exclusion from switches. So for example, some time back, the South African Competition Commission had a banking inquiry. And the fact that the Payment Association of South Africa was involved in deciding who had access to the switch and who was able to enter was seen as a problem that was excluding new entry. There have also been price discrimination and margin squeeze cases in Kenya with USSD, and various other countries have raised off-net versus on-net pricing as being a tool used by dominant players to prevent new entrants from building up networks, even when there is technical interoperability. And there have been a range of other complaints, things such as API access to banking systems. So overall, in digital financial services, I think in our scan of the market, there have been a lot of ways in which exclusionary behavior was being affected by dominant firms. So the third sort of group of anti-competitive practices that occurred in DFS that we found was the use of platform power and user data. So access to user data can act as a barrier or reinforce dominance for larger companies. And that's because data can create a competitive advantage. So how can that occur? Customer risk reduction through better profiling, fraud detection, and personalization. So limiting access to customer data can reinforce dominance. And I think in some markets, there have been sort of...
Dans certains marchés, il y a eu des demandes pour avoir des accès aux datos.
En algunos de los mercados están abiertos para poder tener todos los datos a través de las...
There as well, it's a bit complicated where you have the interplay between data privacy and sort of competition regulation and financial services regulation. So we can go on to the next slide. Another issue that has come through from a competition perspective is leveraging dominance from adjacent industries. So for example, in various markets, there have been vertical integration between telecoms companies and mobile money providers. There's been dominance in e-commerce that has been leveraged to payments, for example, in China. Dominance in devices in Europe being leveraged to payments by Apple, and dominance in operating systems such as the Google Store being leveraged into payment processing. So leveraging dominance from adjacent industries is something else that you need to keep an eye on. And I think what was interesting in looking at these markets was just as tech develops, it's almost like you can't look at what's occurred in the past as being an example of what to look out for, but you almost have to keep an eye out for what the new technological developments are, where new dominance is emerging, and try to understand whether that's creating new ways to leverage dominance. Next slide. So in this slide, I just try to do a bit of a detailed schematic of what you require to provide different types of digital financial services. So you need connectivity and to access a service, you need distribution channels, you need certain requirements to onboard like KYCs or switches, and then you create different products. And each one has its own requirements. Savings might need a license to hold funds and an escrow account. Loans might need transaction data or credit bureau data. Payments needs access to payment switches, and insurance needs data to assess risk. So in each of these areas, there's the potential for competitive harm if there's a competitive bottleneck. So you need access to these things. And these are all areas in which dominant firms or incumbents can block entrants from having access. There's also policy and regulatory barriers that can occur at each of these points. So I thought it's useful to sort of take something like this and within a country, look at all these different sort of parts of the value chain and things required and see how it applies and what competition challenges can and will occur. And can I just ask quickly about time?
Yeah. Sorry, we might need about 5 to 10 minutes now to summarize, to finish it. Yeah.
Thank you. Yes. So then we have looked at some of the regulatory responses that have occurred. So we've divided it into 5 types of regulatory responses: interventions to promote entry, and this includes sandboxes, new licensing frameworks, and tiered KYC. Interventions to prevent abuse, and here there's sort of that link with competition law and competition regulators, but there are also things that fall more solely in the domain of financial regulators, such as codes of conduct and supervision. Then there's interventions to ensure openness, so interoperability, data portability, agent sharing. Interventions to protect consumers in a competitive market. So from a consumer perspective, there's things such as transparency requirements, caps on excessive fees or interest, and then interventions to monitor and assess competition. So here we've talked about indicators, market dashboards, data sharing mandates, and market studies. So in terms of entry, we talk in a bit more detail about tiered and flexible licensing and some of the factors that need to be considered where there's legacy regulation that's been developed for a concentrated banking sector. With this as well, the devil is in the detail with each of these regulations. So having tiered licenses are not enough if there are challenges for new entrants in sort of using these licenses to compete on an equal footing. Then there's regulatory sandboxes, which allow entrants to test products while relaxing regulations that can increase innovation. But here as well, it depends a lot on the specifics, which regulations are suspended, when and for how long, who is eligible and what support is given. And then simplified regulatory requirements for customers, such as tiered and proportionate requirements. The next set of interventions is to promote openness, such as open financing and data sharing initiatives. So how can you standardize an open data exchange to build on top of bank infrastructure and relationships, and also data that can allow for switching, data portability. And it depends a lot on the shape of the intervention. And I think AFI has quite a detailed open finance document as well, which is complementary to this. If you can go on to the next slide. Then there are other aspects, such as digital public infrastructure. And I think, there's real-time payment systems that are open access, such as PIX in Brazil and UPI in India, that have really expanded the amount of competition and dynamism in the environment. And then I think with digital public infrastructure, there's also questions about design. And I think the design of it can also impact on how well it works in promoting competition. Is participation mandatory or voluntary? How do you do the pricing? And I think this is actually some of the key issues that regulators need to grapple with, because having digital public infrastructure is one thing, but making sure that it sort of creates competitive dynamism often requires very serious consideration of some of these details with respect to pricing, with respect to governance, and how different players are involved in decision making. And then there's interoperability mandates, which also has a lot of these design questions involved. Next slide. Then there's interventions to prevent abuses. So you might mandate access to certain inputs. You might have interchange and pricing regulations. You might have scrutiny of mergers and acquisitions together with competition authorities. And in some instances, you might require some forms of vertical separation of platforms. I know in some countries, there are requirements over telecoms companies being separate from mobile money companies. And then I think overall, there's a question about how monitoring and assessing competition can work. I'm a very big fan of market studies that are detailed, that allow for nuance and a lot of qualitative information on a subsector. But I think at a high level, you can also monitor competition by looking at different screening indices, entry and exit, pricing patterns, switching behavior, penetration and intensity of use, in addition to concentration. And I think what's important is to identify market misconduct and consumer protection concerns early and try to group it together to see whether there's systemic issues. Next slide. So overall, I think this study is quite broad. It delves in a lot of sort of little cases with examples from different countries, but there's a lot more that can probably be expanded on and done. So competition is a driver of innovation and inclusion, but its impact depends a lot on market structure, firm conduct, and regulatory design. And if you compare how digital financial service has developed in other countries, you often, from speaking to regulators, from speaking to companies, find that there are often bottlenecks that could be removed to ease expansion within the market. So it's context dependent. I think what's important is that you need to assess the market based on country specifics, and sort of tick box approaches to competition are not going to be useful, but very contextual analysis as to what the actual challenges are and trying to ease these bottlenecks across the value chain will be helpful. So regulators should consider monitoring digital markets, ensuring fair entry and acting early. But a balanced regulatory approach is critical. So you've got to combine the ex-ante measures such as interoperability and open access with strong ex-post enforcement. And then importantly, as was mentioned, collaboration across regulations, across regulators for regulations and supervision is important for market development. And with digital financial services, this often means close collaboration with communications regulators, because market power in communications or infrastructure, telecoms infrastructure plays a role in your competition. Competition regulators often might not have an understanding of some of the specifics of what is required. And then you have the data protection side. So collaboration with regulators is also very important. So this was like sort of a high level analysis, but I hope that you all do get a chance to read the document, and thank you for your time. And sorry if I've gone on a little bit longer.
Thank you so much, Shaista. Thank you for the presentation and trying to put a lot in just over 25 minutes. I'm going to take a pause here. I know we have a panel, but I also know that there are a few burning questions. So I'm just going to take a pause for maybe 1 or 2 questions before we invite our expert panel who will allow us to kind of put what we've been talking about into actual day-to-day practice, what that means. So I'll just look for maybe 1 or 2 questions. I'm going to request support from my colleagues, Giaz or Ira, to just choose 1 or 2 questions, if there's a burning one, and then we can go to our panel.
Thanks, Anthea. There's one question from Ms. Asma Sami. The question is, are there any quantitative studies to assess the impact of competition policy on the performance of the financial market?
Great. Shaista, I think you can take that on.
Yes, thank you. Sorry, I just need to repeat that question quickly.
I'll put this in the chat box as the latest message. Are there any quantitative studies to assess the impact of competition policy on the performance of financial markets?
Thank you. So I think in the study, I didn't actually, I think there are some quantitative studies. I'm just going to check quickly whether we've, sorry.
Chase, I can't hear you. I don't know if it's on my side.
I can hear her clearly.
Oh, sorry, Anthea. Yes, I am aware of quantitative studies. I don't have it top of mind at the moment, but I'll be happy to send it through maybe a little bit later during the session when I just can manage to look at it. But I think overall, this is a very big research area for sort of expansion. So it's definitely an area that's underrepresented in the literature. But I'll look for the study that I'm thinking of, and I'll pop it into the chat shortly.
Yeah, I could also just check in on my panel just before I invite them, if you also have a response to that.
If I may interject, Anthea, just with a response on that point, I would say that there have been many empirical studies on the impact of competition on financial stability and generally also on financial inclusion. And I'll post in the chat a recent OECD report that cites much of this empirical evidence and would advise you to read Xavier Vives, who is a leading scholar on this point and has conducted much of this empirical evidence. And I'll post this in the chat shortly. Thank you for the opportunity to comment.
Thank you so much. Do you have another one question we could ask before we go back to listen to our panel?
Sorry, Anthea, I've just managed to find my references. So I've just popped that into the chat. Sorry for the delay.
Thank you. No, that's great. Okay. Okay, great. Well, while you're thinking of your questions and putting them into the chat, I'm going to introduce my panel to you. I'm very excited to be able to share, to introduce them to you. And first we have Dr. Amira Abdel-Ghaffar, who's from the Central Bank of Egypt, one of the AFI members. She has over 23 years of legal experience and a proven record of high target performance in corporate, commercial, and competition law. She's also had notable achievements and milestones, such as drafting the new corporate law and a new draft of the commercial registry law in Egypt under the umbrella of the USA consultancy. She has a doctorate of laws in which she did a comparative study between the Egyptian competition law and US antitrust law. She's previously worked at the Egyptian Competition Authority. She's also, another key milestone was that she was present at the establishment and activation of the COMESA, Mergers and Acquisition Control System. She has also been the vice chairperson of the COMESA Competition Commission for 3 years. And in 2021, she joined the banking sector, where she's been responsible for implementing policy, competition protection rules and regulation in the financial sector in Egypt. So welcome to Dr. Amira. I'd also just like to introduce Beatrice, who just spoke previously. She's a competition expert at the OECD Competition Division. Since joining OECD, she has contributed to the organization's policy and capacity building in a range of issues, including financial services. And some of the work that she's been involved in was a committee paper on competition in mobile payment services and balancing prudential regulation and competition considerations. She's a lawyer. She has served previously as Assistant Attorney General at the Office of New York, and she's had various experiences that we can share as well. I'm also happy to introduce to you Kennedy Komba. He's been previously with AFPI, and I'm sure most of you know him as a steadfast member here. And also he's one of the representatives from the Competition Knowledge Exchange. He's previously worked as a Director of Strategy and Financial Inclusion Policy with AFI, He has served as the program manager with a Macroeconomic and Financial Management Institute of East Africa, MEFMI in Harare. He holds an MBA from Malaysia and is currently serving as the Director of Financial Deepening and Inclusion with the Bank of Tanzania. Thank you so much for agreeing to be with us and to join us for this panel. I'm sure you can understand why I'm excited to have them join us. I'm going to just quickly start by asking them to share their reflections. Maybe just to mention, Shaista is also part of the panel. So any questions you have for her, please feel free to raise them. So I just want to ask the panel to reflecting on the presentation, reflecting on the report, are there any key insights that stood out to you? I'm going to ask each of you to maybe share your thoughts. I'll start with Dr. Amira, I'll go to Beatrice, and then I'll go to Kennedy.
Have a good day, everybody, and thank you for the invitation for today. Actually, this report is very good point and a very good step to understand more what is effective financial inclusion, because now competition is one of the pillars that can foster and
Uno de los pilares que va a promocionar
add more to the financial inclusion.
Pour renforcer l'inclusion.
And you know, if we have some markets that suffering from anti-competitive practices, this is may affect negatively the financial inclusion for sure. And what is very good in the report we have that it gives a full and comprehensive overview about what kind of anti-competitive practices that can emerge in the digital markets, and the effect of it, and the structure of the markets and the barriers. It's very, very informative, very inclusive. So this is actually that was my insights about the report. Actually, thank you very much for this achievement.
Thank you, Dr. Amira. Over to you, Beatrice.
Thank you very much. Well, I would also like to start by echoing Dr. Amira and congratulating you for this excellent report and expressing how grateful I am to be part of this insightful discussion. So thank you. Gracias. Merci beaucoup. And as to some key takeaways, I think that the first thing that came to mind while reading the report is that from a competition enforcement perspective, a lot of these issues and bottlenecks are very familiar to what we see in digital markets and even in some traditional brick and mortar markets. So I think three key takeaways, and very much echoing Shaista's excellent presentation that stand out to me as are that in digital financial services, markets do tip the same way that they do in digital markets, things like network effects and data advantages and switching costs and good old-fashioned first mover advantages really matter here. So acting quickly and being very vigilant as competition enforcers is key. Another great thing that the report, I think, does a very good job at doing is underscoring how regulation can at times unintentionally entrench incumbents or present as a bottleneck to entry and expansion. And I think that while certainly, say, prudential regulation and competition can pull in different directions, these indeed can be properly calibrated and reinforce one another and make better outcomes for consumers and financial inclusion and markets overall. And I think my third takeaway, again, going back to we're seeing similar patterns here, is that similar solutions are present across jurisdictions, though, of course, markets will differ and business models will differ. It feels like we're all exploring pro-competitive tools or remedies, from interoperability to open banking to data portability rules and digital public infrastructures. And I think, as highlighted in the report, there are some really excellent examples from different regions that allow us to assess how these have been implemented. As echoing what Shaista said, really, it's all about the detail. So I'll stop there. Thank you very much.
Thank you, Virginia. Kennedy?
Thank you very much, Anthea. And I'll also echo what Beatrice, Dr. Amir, and also Shaista's great presentation in terms of what the report has revealed to us. To me, I take two takeaways. Number one, first of all, I want to congratulate AFI for coming up with this report, a report to which I take it as a playbook. It's more than a report because it gives you the kind of market landscape across the region, and the fact that you can also contextualize it based on your country-specific realities. But then, apart from being a playbook, it points out some two aspects that I think are very relevant for us to pick. Number one, it shows to us as regulators the type of responses that we can take, as pointed out by Shaista, but also highlighted in detail in the report in terms of interventions which are practical in the sense that examples have been provided and countries are actually working on them. And the last point will be, it also points out on how you can take this intervention. So, for instance, if you haven't taken an intervention yet, then at least you have an ex post regulatory intervention that you can do. So you can do ex ante or you can do ex post, and all these are provided in the report. And that's why I'm saying it's kind of a playbook, gives you a hands-on kind of skills that you can apply. But lastly, it also gives the ambience of the peer learning that you can get specific cases that are pointed here in the report, which you can call AFI and reach out to the countries that have been mentioned, which are part of the network. Thank you so much, Anthea and team.
Thank you, Kennedy. Shaista, I'm going to come back to you. You know, when we talk about competition and when we talk about network effects, some of the key questions that keep coming up is that this is the market. This is what it's meant to be like. If you're the first into the market, you deserve to get fast move advantages. You deserve to move ahead. You deserve to reap this profit. So we often struggle with that. Why, if we're encouraging people to compete and to aggressively move into these markets and to grow, and it happens to be a market with structural barriers, why are we concerned? What is the key concern there?
I think we've got it. Okay.
Yeah, we had a slight interruption.
Yes.
Over to you, Shaista.
I think, you know, with the sort of network effects and structural barriers, you know, we do want people to invest and to grow bigger in the market. And I think, as Beatrice said, you know, this is a parallel to what's occurred in digital markets, where, you know, it takes a lot of sort of knowledge and research and insight to build up. And then, you know, once they get there and they create a market in some instances, why are you suddenly saying, you know, don't profit on this? But I think overall, in the long run, what you're trying to do here is ensure that there's benefits for everyone in the market and that the market itself is innovative. So the problem arises when these structural factors lead to dominance that unchecked create sort of outcomes that are poorer for consumers. So if you have one monopoly provider of financial services, there's going to be very little chance that prices are maintained at a low level, that there's innovation. There'll end up being stagnation in the market. So what you're doing here is creating a playing field where you can spur that innovation and that competition that results from it. And, you know, having these structural impacts, you're not saying that they've done something wrong by growing, but you're just trying to minimize the effect of these impacts on growth of other people who also are able to then enter the market and create a competitive foothold. But I think overall, from a kind of political economy perspective, this is one of the tricky aspects, because there is something to be said for the fact that, you know, we have created this and we are innovating and you're punishing us for being successful. So I think it is tricky, but overall, the longer run perspective is that you focused on the consumer and what's best for the consumer, not what's best for the company.
Thank you so much for that, Shaista. And that kind of leads into this question I have for Dr. Mira. bearing in mind some of these discussions that are being had. What has been your experience in Egypt and with the Central Bank of Egypt? Please explain some of the competition challenges that you may have experienced as digital financial ecosystem has grown, and how has the Central Bank responded to these challenges?
It's a good question, Antia. Yes, mainly we are facing, challenges with the concepts and challenges with the markets or market players. Concepts, yes, the biggest challenge I've been facing now, that's the special responsibility concept. What is the special responsibility concept? Is this the responsibility of the dominant firm? Because when we have a dominant firm in one of the markets, it means that the competition is already reduced by his very presence. Okay, so this dominant firm should be very careful about his market conduct, because we don't want to hinder the competition and we don't want to reduce the competition more or further or stop the development of the other competitors in the market. It takes us to a kind of challenge with in discussion and awareness with the dominant firms in the market, because sometimes dominant firms, they argue against some remedies, and they say to you that why some conditions or some practices are prohibited for the dominant firm are not prohibited for the other market players or the competitors. Now, no, we have this problem that you are already reducing the competition by this market power, a huge market power you have. So to explain the concept and to produce a product while you are having a dominant firm, and not to hinder the competition and not to reduce more or further the level of development of other competitors, it's a key issue for the dominant firm. And I think that's one of the challenges that we faced, because generally the digital markets, financial digital markets, and even the conventional markets, you will face many firms that they have certain or a substantial level of market power. Also, I think other challenges that we are facing, the amount of data and the amount of the hard documents that the competition unit need to assess. Actually, this amount of data and this amount of documents, it creates a kind of challenge to react and respond to the market conduct in the right time, and not to be always delay in responding the market. Also, we have another challenge. It's very, very clear, and maybe a lot of the participants, they already faced this challenge in their countries, that the digital markets, financial markets, digital markets, we have many of overlapping between the partnerships and the activities, the economic activities, and these overlapping, it's very difficult to figure out what is the map of this market. Now, what we do in the Central Bank of Egypt, to actually started to develop in the cooperation with the data science department a kind of an AI tool for the competition. What is the AI tool is doing? Actually, is doing two phases. Now we are in the first phase, almost done. And where the two phases of the AI tool, phase one is to collect, read and analyze the competition regulation cases, judgments, and materials related to financial services, whether it is conventional or digital. And this will be, used as references to analyze the cases we are facing. And the second phase of this AI tool project, that's the very important phase, or actually this is the core of the AI tool project, that when the AI tool will analyze the amount of data we have and the amount of documents we have, and trying to help us to figure out the map of the market, about the overlapping for partnerships, on overlapping of activities, and for sure to help in assessing the anti-competitive practices or merger and acquisition. I think the last one, which is related to the merger and acquisition, this is a very usual challenge. I think also a lot of the participants, or maybe the panelists as well, they met already this challenge in their countries, that the dual merger transactions. What I mean by dual merger transactions, when you have a transaction, it has like, two dimensions, a vertical and horizontal. It happens actually when we have a vertical integrated firm, which is already, submitting an application to acquire or to purchase, shares of a competitor, and in the same time, he's a client, or a competitor, or in the same time, he is a supplier. So this is one of the most complicated cases we're facing. And in these cases, we need to do an effective and a very comprehensive analysis for the transaction on both ways, or on both directions, for the vertical and for the horizontal. So I think these the challenges, or the major, challenges that we met so far under the umbrella of the CBE, and I think that's how we're dealing with this, till now. Thank you very much.
Thank you. No, that's very exciting to see. You've already cited certain challenges, but already starting to think about how to tackle them. So I think that's very important, and using very much the latest technology as well. And you also mentioned something that's very important about the mergers and acquisitions. We're not able to get into it so much, but mergers and acquisitions, and having and situations where you have a firm that is a provider of a service, but is also that's a provider of a service, but is also a rival, and what those dynamics can be like. So thank you so much for that. Kennedy, I'm going to go to you now, just to talk about Tanzania. And we know there have been, the report has talked about the situations of market concentration, of dominant players in adjacent markets. I don't know if Tanzania has similar challenges. What is your assessment of the competition dynamics in Tanzania, in the mobile money and fintech ecosystem, and how have you tackled these?
Oh, yes, thank you. Thank you so much, Anthea, for that. Certainly, Tanzania is not isolated in competition, and certainly market dynamics are there. We started addressing from a regulatory response, and also collaborating with the market to address the issues of market dominance way back in 2014. Also pointed out in the report, where we did encourage, particularly on the mobile network providers on the DFS side, to enter into, and we were actually one of the first movers to do so, to enter into interoperability between digital financial service providers. By that time in 2014, up to 2015, we had four major players. The dominant player was one who had a market share of around close to 50, around 47, somewhere there. And the rest was shared with number two, who had close to 30, 20 something. and then the other two players had equally almost the same market share. So we had, of course, the first mover, meaning the first player, not to mention names here, but obviously there are so many reports also referenced in the report, which shows which of these players did have that market share. So at that first point of intervention, our intervention, prior to that, our intervention was kind of mandating non-exclusivity of use of agents, so that at the end of consumers who are actually benefiting from these services will be able to have access to the product, which was then digital financial services. Again, as pointed out in the report, DFS was one of the innovations that really helped access to finance to our communities. By then, we really had low access to financial services, and our public policy objective was to ensure that we have a product that will reach to the masses of the economy. So that was the first phase of our intervention. From urgent and exclusivity, we went on to interoperability, which was fairly making MNOs agree on a bilateral arrangement. Fast forward that, we still found out there were still some challenges, which have been addressed by what I'll just point out shortly. So currently, from the last 3 years ago, actually 4 years up by now, we entered into coming up with a centralized switch, which we call it Tanzania Instant Payment System, TIPS, which we are happy to say we also received an award in this GPF that ended in July this year, together with other innovations in financial inclusion. So what really helped us in mandating universal interoperability, it helped to increase competition by neutralizing the advantage that the number one first mover in the market had over the rest of the players, and therefore also reduce the network effect of the barriers to entry that it really was causing the market not to work very effectively. But then, using TIPS, we also introduced standards. All players are required to apply the same messaging standard. I think it's ISO 222, which then creates a format that all players are creating a level playing field to be able to exchange messaging. It eliminates the aspects of having one gatekeeper who would probably require only bilateral arrangement based on their messaging aspects. But the other aspect, it really helped by ensuring that there's a centralized process of clearing. The settlement is done at the central bank, and therefore reducing the pressure of liquidity on the previous bilateral interoperability that we had. And the fourth point that I think was how we also helped in the market by introducing TIPS interoperability or the instant payment. It actually created a level playing field in enforcing competition on the front end of services. So now that everybody is interlinked within the switch, instant payment becomes the market standard. And the only differentiation that players have to do is to come up with new products that will differentiate themselves. And we have seen this kind of increasing competition in terms of value-added services that have been offered, credit services that have been provided, overdrafts, instant overdrafts, online lending, investment products, insurance products, and a couple of new innovations that are coming up in the market almost after every month or so. So this really has helped in terms of pushing the impact of having probably a monopoly in the market, who probably will just fix on the advantage that they have, but then it stifles the potential innovation. Lastly, I would just say that because of what we have done, and we still see some few challenges that I think Dr. Amir also pointed us, and for us, we see there's still a need to open the market further, moving on to open finance, open banking, so that data that is sitting in now this subsector, which is mobile network operator and the banking sector, much as they're interoperable, but data is still proprietary, held by the data custodians. And consumers need to have that power to use their data, and this is the work that we're working on. And we've also made it possible now to create price discovery by working with an AI price comparator, which ensures that the MNOs or bank services that are clearly transparent in terms of the pricing to the consumers, and therefore able to make the informed decision. So this is how we've been trying to address some of these challenges that we'll be facing in terms of competition in the market. Thank you, Anthea.
Just incredible progress there, starting from the prohibition of agent exclusivity all the way now to interoperability at the front end. Great progress there. Beatrice, and maybe just to also mention for our French and Spanish speakers, please feel free to have questions, share questions. I'll ask for questions after this. We have interpreters, so don't feel shy about asking questions. So for Beatrice, from where you sit, maybe from a global perspective, what are the trends that the OECD is observing in competition authorities, and how are financial regulators adapting to these changes in digital financial markets?
Thank you, Anthea. So a couple of key trends that we're seeing at the OECD, and I think that they'll really echo previous comments that have already been made here. For starters, I think that we see a trend toward proactive enforcement. That is, we know that these markets tip. We know that it's very important that we're keenly watching before markets have potentially irreversibly tipped. And so we are being far more forward-looking, we are market monitoring, and essentially we're doing a lot of future scoping and future proofing. And I think a key thing in doing this is conducting market studies so that we understand the markets before we even identify potential exclusionary conduct and start acting. Second, and very much echoing Dr. Alfred Hanning here, we see a shift toward closer cooperation. These are markets where no single authority has the full picture, and truly looking across institutions between financial authorities or prudential regulators, central banks, and competition authorities, as well as consumer protection and data governance authorities, we can better target and calibrate regulation, and we can also better come up with solutions that actually work. So as part of this, we're seeing more structured coordination. These are things like memorandums of understanding to shared market monitoring, cross-sector consultations, and joint sandboxes. And I think we have a couple inspiring examples across jurisdictions on this front. Top of mind, for example, the competition authority in Spain suggested a joint sandbox, which is now managed with the central bank. In Israel, there's a cross-ministerial and cross-agency financial competition initiative that sits a whole of government looking at how to increase competition. And I think that we've also certainly seen this in places like Nigeria and Kenya and Ghana, where the competition authority and financial regulator exchanged, and this made real improvements in the market. And I think I'd close with, it's not only about just enforcement and market studies, it's very much also about advocacy by competition authorities and ensuring that when regulations are being drafted or consulted, that competition assessments are taking place so that we can identify where there might be some bottlenecks that are not necessarily intended and can still enable that entry and expansion by different players. Thank you.
Thank you so much, Beatrice. I'm going to take another pause here and see if there's a question in the chat, which I'm going to raise, but I'm also going to ask if there's anyone who would like to raise their hand. Maybe as you're preparing your question, I'll just read this one. This is, I apologize, I may not read your name very well, Rukaya. Is there the access to know to more about the AI tool? There's interest in understanding about that AI tool that the CBE has developed, and maybe also we could find out from Kennedy as well about the AI tool that they're using, if there's some link or additional information that we can get on that. But also, I don't know if there are any questions, if anyone would like to raise a hand, introduce yourself and maybe ask a question to the panel or to Shaista from the presentation. Okay, while people are thinking of their questions, maybe Dr. Mira and Kennedy, you can answer those, and then we'll go into another round.
Excuse me, what was the questions about the AI?
They want to know a little bit more about the AI tool. I don't know how far you are in the process of implementing. Maybe you could share a bit more about
we're
it.
not in the phase of the implementing now. We're in the phase of the developing. Okay, we already developed the first phase, and we already tested the first phase. The results were very good, and now we are moving to apply the first phase, and the second phase is developing now. We're developing the second phase now.
Kennedy, do you have any additional information about the AI, how you're using it as well?
Yeah, thank you. So for us, we are testing, but how it's going to work, we're at 2 levels. One is on the basis of the statistics that we're going to get from price comparator interactions or prompts that we receive from the communities or from the public. Secondly, the chatbot that we are working to improve. We have already started phase 1, which we have a consumer complaints resolution system where we have added a USSD link for those who are not able to have access to the internet. And the information that we receive, we use it for training the tool to get basic response from that level of top layer in terms of frequently asked questions. And then the second level to which we want to use is for market conduct, where those inputs that we are receiving from the complaints that we receive from the public will be used to feed into off-site kind of surveillance for us to move forward. So that's the intention of which we are building up that database, and that apparently phase 1, the system is already up and running in terms of receiving information. And the second phase is training the module to be able now to do what I say, to provide for us a regulatory tool for market conduct. Thank you.
Excellent. Thank you so much, Kennedy. I see someone has raised your hand. If you don't mind turning on your camera and just introducing yourself, and then you can go ahead.
Yes, thank you. This is Maram Hafiz from Central Bank of Egypt. I'm working as a section head in the competition unit, especially for the digital financial sector. So first of all, thank you so much for this very fruitful report and valuable insights from your side. I would just ask if you can share with us some more challenges that you have captured with the bank-led model for all fintech startups under the central banks, different central banks. Maybe Shaista can help me if there are some special reports that tackle this issue. As from what I understand, it's a little bit tricky because yes, it's a new entrance in the financial sector, so it's a little bit hard for the central banks to give them the full license. But taking into consideration that we should not kill their innovation. So if you have some insights, I will be grateful to you. Thank you.
Thank you. Just checking if there's another question. Okay, I'll ask Shaista to respond, and if any one of the other panelists would like to respond, please do so. Over to you, Shaista.
Thank you. So I think one of the so your question, if I understood it properly, is related to central banks dealing with fintechs and entry into the market. So I guess, the fintechs are interacting on so many different levels, and there's so many different fintech models. So the one issue relates to access to payment systems, for example, and whether fintechs have access. And in some of the central banks that we spoke to, they had been a first stage of opening up licensing and then almost closing it because there was a sense that this is creating too much of risk and there were sort of too many companies coming in and things. So I think, from the licensing perspective, there's a question of how to ensure that you sort of balance stability. And I think, there have been some partnerships, there have been some tiered licensing where there are different types of licenses for fintechs depending on what exactly they want to do. So I think the licensing has been one area where there are a lot of different models that have come through on dealing with fintechs. But overall, I think the sort of tiered licensing approach has been the one that seems to be working well. The second issue for fintechs, and one that's been raised quite a lot, is just relating to open finance and access to data. So I think fintechs often want to have APIs into digital banking services or banking services, or they want access to data to be able to create their products. And this has been a second area that's required some regulation and thinking to ensure that it works well. So this is a second area that I think is still being developed, and creating APIs that allow fintechs to utilize banking information in a complementary way is often received quite well from banks. But APIs that allow fintechs to compete with banks have been less well received. So there is some tension there in how you sort of regulate this in a way that's beneficial for fintechs, when there is kind of the resistance to creating open data in a way that then creates competition. And then the third area, the third area where central banks have sort of looked at fintechs has been in creating sandboxes and regulatory structures to facilitate entry. And I think with this, you can sort of have a sandbox and say you have a sandbox, but I think the successful instances has been where there's a little bit of support for these new entrants. So firstly, navigating the regulatory structure is quite challenging. So I think support just at that very basic level. How do you sort of navigate this? What type of license would you need for your type of product? There's a lot that central banks can do in assisting fintechs in entry, just from a very basic perspective. And then looking at how the sandbox can allow them to enter, and then what happens in the next stage where you sort of re-implement the regulations. So that's sort of the third area where sort of central banks have been facilitating fintechs. So sorry, I gave you a very broad answer. I think, there's so much of detail behind each of these sections, but that's kind of the three areas where they've been working on fintechs.
Thank you so much.
Thank you. I don't know if there's any other question, or if one of my panelists wants to tackle that question as well. Okay. Yes, Beatrice, please go ahead.
Thank you, Antea. Just really to echo so much of what Shaista said, and also underscore a point by Dr. Amira in attempting to answer this question, I would start by agreeing that there's very interesting scale-based models for prudential regulation across jurisdictions that have enabled entry for fintechs while enabling that competition, but also preserving stability. And they're a mix of both entity and service-based regulations. And I'd say that Mexico, Brazil, and India are quite interesting examples and have secured a lot of entry and competition in markets through that more flexible risk and scale-based regulation. I'd also flag that beyond just licensing, as in what services may whom provide, there's also kind of the price tags to entry that are also interesting to consider, such as the capital requirements and deposit guarantee scheme requirements and other prudential regulatory parts of the regime. And I'll note that there's been really interesting discussions, again, in places like Mexico, New Zealand, and Australia, with exchanges between the competition authority and central bank in trying to calibrate things in the right way to ensure both stability and competition. And just to underscore a point that I think is very important that Dr. Amira made earlier, she talked about mergers and acquisition, but also partnerships. And I fully agree with everything she said, but wanted to underscore the point on partnerships, that we see that sometimes when regulation is designed to be complex or overly burdensome, this might mean that new entrants are being steered toward partnerships, not only because they might, for example, need to partner in order to secure a license, or because they might need to partner to get access to rails or other key infrastructure. But I would pose that this has both competition and prudential risks, not only because it reinforces incumbents' advantages, but it's also blunting rivalry, and it's also creating a lot of gray area, I would say, for prudential regulation, as these new entrants relying on the incumbents are not necessarily within the scope of prudential regulation. So I pose that this has risks for both sides, and thus it's something really worthy of considering to ensure that we're not steering toward partnerships and blunting rivalry and allowing independent entry into these markets. Thank you.
Thank you, Beatrice. Kennedy, is that you raising your hand? Please go ahead.
Yeah, I'll just add another perspective to this, which in addition to the points raised earlier by my colleagues, I think the other side that we've seen a challenge for most of these fintech, most of them are small and startups. So looking at the angle of venture capital and private equity regulations is quite important. And therefore, we also collaborate with the Capital Market and Securities Authority to support the entry of these players. They may have a very good initiative they would want to introduce into the market, but what holds them to scale and also to be sustainable is the aspect of capital, access to capital, angel funders, and the like. So taking that into the perspective of ensuring that the ecosystem is well supported for startups and fintech is quite important. Thank you.
Thank you. And while you still have the mic, there's a question here that I'm going to ask Kennedy, but also ask Dr. Mira to respond to. So in your experience, when trying to initiate a competition enabler, what objections do you hear from the decision makers? I'm sure lots of people complain. It's not easy when you try to implement some of these, whether it's the tiered licensing or whatnot. What kind of decision maker, what kind of challenges, objections are you hearing? And I've given an example here, for instance, the decision makers concerned about too much competition in less stable, sorry, my screen is a bit sheltered, in less stable financial institutions. Are there any kind of challenge, objections, and how are you responding to that? So that's to Kennedy and also Dr. Mira.
Hello, if I understand very well the question, that what was the objection on the competition remedies or the objection on the competition assessment? I think Antia, if you catch it, the exact meaning of the question, I think that's objection on the competition assessment.
No, well, it can be that. I think it's the implementation of a competition enabler, but maybe I could ask the person asking the question to maybe ask directly. This is Ryan. Ryan, please go ahead and ask the question.
Sure, thanks. I was just wondering about, we're sort of thinking about research topics over the coming couple of years, and we were wondering in this competition space among financial services providers, and we were wondering what kinds of objections you hear from decision makers within the central bank when you propose something like, well, we'd like to introduce a new open category of licensees, for instance, in order to promote competition. What kinds of objections do the decision makers have? So, for instance, because I mean, so from a competition practitioner's perspective, it sounds obvious. Of course, you should open it up and you should have different categories of licensees and everything should be interoperable and so on and so forth. But often decision makers have something in the back of their minds that they're concerned about, that they're worried. I mean, are they mostly worried about fraud being introduced by all these little guys coming in? Are they mostly worried about less profitable banks and therefore a less stable financial system? I was just wondering, what do you mainly hear, as a kind of a concern that we could maybe look into from a research perspective to try and address?
Yeah, actually, yes. Actually, sometimes for some certain services, that the competition for sure recommends always that we don't need to put cap on the prices. We don't need to, put some severe or harsh criteria on licensing. But this is, yes, you are right. Sometimes we hear from other departments in the Central Bank of Egypt that no, we need to put some caps to protect the consumer, because if we open the prices as much as any competitor they need at certain level, we will not be able to control the prices, and we will harm actually the consumer, and maybe we will harm the financial inclusion itself. You see, and here is the balance. Here is the balance. Here is the role we are really playing here. That yes, we know that it's the perfect situation, not to set prices, but no, there is other considerations here for the financial services, for financial inclusion, for the financial stability, yes. So here we go for compromises. Here we go for, maybe we outweigh the benefits and the harms and stuff like this, unless there is a very severe harm on competition. So yes, this kind of objections you can hear when you are part of the financial regulator. And I'm sure that financial regulators in other countries, they do the same with the competition authorities. And I think till today we're doing well in this balancing, but it exists. Yes. Thank you for the question.
Yes, Kennedy.
Thank you so much, Rayan, for the question, and also I'll add on to Dr. Amir's responses. For us, what we hear in the bank when it comes to open up more for competition are two main areas, and the first overlaps to the next. The first is the pressure that too many entrants and small entrants can build on supervisory function of the bank. We already have an example on the microfinance subsector, where the central bank had to create 4 levels of microfinance in the country, and 2 of those levels have been delegated to another authority because of the overwhelming sheer number of entrants in the micro sector. Now we see fintechs coming into the market. There are so many, and I think, if I'm not mistaken, in the presentation of Shaista pointed out some of the regulatory interventions where you allow new entrant and then you close in, because then you realize that you're pulling in so many of the fintech to come into the market. And therefore that's it's kind of an issue of balancing between adding innovation, but the quality of the entrance into the market is as a problem. But then there could also be big players that you could allow in to come into the market, like the big techs that can actually even stifle the existing players in the market. And you'd find some markets are not allowing for big tech to come into their own entrance. They can't open for cross-border. So it's part of the supervisory function, which then spills to the second point, which I said is the financial stability, AML requirements, the capacity of the regulator themselves or ourselves to be able to have tools to be able to be more effective, and in terms of assessing, supervising new technology that comes in with these dynamics that of the regulation side. And if we are not able to fully supervise, go in tandem with the technology, then it means that our role of financial stability may be impaired. So I would put it in that context. So it's an issue of trying to find the best way of also capacitating the supervisor to be able to also be kind of ready. If I say market readiness also goes to the readiness of the supervisor, than to stifle innovation for fear of lack of control, if for lack of a better word, which then spills over to the mandate of the stability side. Thank you.
Thank you so much, Kennedy. And just a last round of questions. This has been a very exciting discussion, but we can't go on forever. Maybe just for all of you, please include your closing remarks as well. It may be 2 minutes or so. What do you see as either the emerging risks or emerging areas that we should focus on in terms of competition and DFS? I know we've mentioned a few here in the discussion, but are there some that really particularly stand out to you in terms of the key risks that are rising, or the key areas of intervention or innovation that you're seeing in the DFS market with regards to competition? Maybe if you could tuck that in with your closing remarks as well, that we could end this session part of the agenda. Maybe we could just start we'll start with Shaista, we'll go to Beatrice, we'll go to Dr. Mira, and then end with Kennedy.
Thanks, Anthea. I think my closing remarks, sorry, I just see another question. Anthea, do you want to do the last round of questions first and then closing remarks, or move straight to closing remarks?
You're on mute, Anthea.
Oh, I'm on mute, sorry. Thank you. Thank you for this question. We'll tackle it as well. Let's go with this round of questions and then we'll tackle that after. Shaista, you can go ahead.
Sorry, I was on mute now. Yes, so I think in my closing remarks, the first thing I'd like to say is that this area is evolving and the challenges are also going to be evolving. So it's something that's going to require sort of a lot of continual monitoring, research, development. I also think that I'd like to say that I think that this particular report is maybe just the start of the work that the competition knowledge enablers need to be doing. And I know that, Anthea, you have mentioned that you've got a program that's going to expand from this. But just to say, within each sort of subsection, there's just so much that can be sort of expanded upon and discussed, and sort of playbooks written on each area of it. So I think, I hope that this is the start of a process. And I think that each of the members have so many insights that expanding upon each subsection will be really useful going forward in expanding the program. In terms of the key risks and benefits, that's a tricky one. But I think overall, I think they're going to be sort of challenges are going to be country specific. But some of the bigger areas, I think, are going to be related to some of the intersections between adjacencies in markets. So, the adjacencies between dominance in telecom markets and mobile money, the impact of platforms. I mean, we're focused a lot on sort of the old tech, but there are a lot of new tech platforms that are developing, that are being used by lots of people. Even mobile money, for example, in some countries is creating a platform on which lots of other financial providers are then piggybacking. So I think the sort of concept of having super apps, of having platforms and adjacent dominance from other industries is something that's going to be expanded upon with the development of digital markets. And I think we're seeing some of that with sort of these questions related to app stores in certain markets, but I think sort of your super apps are going to rise in importance as well, and that's something sort of for to keep insight on the horizon. But I think in general, the questions and the sort of key regulatory interventions that we've mentioned are all of fairly strong importance going forward.
We'll go next to Beatrice. Don't know if we lost you. I'm not seeing you here.
I am here. Can you see and hear me?
Yes, now I can see you. Yes. Okay.
Thank you very much, Anthea. So in terms of top of mind considerations or key risks, I'll say that from a competition enforcer perspective, the first thing is watching for exclusionary conduct. And I'll permit myself to kind of tie back a question that was raised earlier, which was about dominance and special responsibilities of incumbent firms. And I'll just say that from a competition enforcer perspective, we don't view dominance in itself as anti-competitive. The reason that there is a special responsibility when firms are dominant, or maybe even the first movers or innovative, is that because of that dominance or incumbency, they have the power to price absent considerations of competitors or consumers or act in an exclusionary way. And thus, when they act in an exclusionary way, that is certainly the role of the competition authority to step in and protect competition on the merits. So it's certainly not about punishing innovators or dominant companies, but that dominance does provide the incentives to either raise rival cost or foreclose competitors or self-preference themselves, including through what we see as these growing ecosystems of adjacent markets. So I would say that watching for that exclusionary conduct across ecosystems, across markets, and ensuring that both infrastructure and markets remain accessible and contestable would be a key kind of risk and top of mind priority from a competition perspective. The second one would be related to effective remedy design. And I think it was very inspiring to hear from Dr. Kennedy and Tanzania's experience, for example, and the fact that these remedies really do need to be iterative and respond to market dynamics over time. And they might also involve future proofing. So thinking about how AI might impact these ecosystem markets in the future. And we do see that type of future looking remedy design in digital markets today, and we'll likely start to see it when it comes to digital financial services as well. And then the last risk, again, is I'd underscore protecting actual and potential competition and the beneficial effects of competition by ensuring that partnerships are not stifling or steering the direction of innovation or the intensity of competition. And just by way of one key takeaway as to what I think is the most fundamental thing in my mind to ensure that we can do this effectively really is cooperation across regulators, across authorities, because competition authorities, I think, are essential to the enforcement side, but certainly prudential authorities, central banks are essential for the regulatory side. And it is important to keep these markets both stable and resilient, but also competitive. And I think that the two policies can indeed complement each other and improve on each other. So thank you so much again for this wonderful conversation and excellent report.
Thank you so much, Beatrice. Over to you, Dr. Mira.
Okay. I think as a takeaway, now we're trying to balance the competition aspects with the financial stability. This is one of the major issues. And also, we're trying to secure a level playing field with the startups or the innovations and the already established banks or the already established, big firms' dominance. For sure, we're not, punishing dominance for being dominant. No, but no, for the abuse. But, exactly, this is what I would like to say, that there is a key issue here is the regulation, the design of the regulation, and the criteria of drafting the regulation. I mean the competition regulation or any other, financial regulation that could be issued by the central bank or the financial regulator. First of all, these criteria that we need to maintain and to bear in mind that the due process should be there, transparency should be there, market consultation should be done, and also the impact assessment of the decisions that the authority or the financial regulator is taking. We should have a kind of impact assessment of this decision on the market, not to throw the decision on the market and that's it. This is a very, very, key issue here. And always to take into consideration the pro-competitive approach while licensing or while designing new products and maybe one of the very tricky issues here, the designing of the algorithms. And this is actually the next phase we are facing, expecting that need a lot of care about the design of the algorithm, which will decide for the future for, granting loans or whatever. I think this is the areas that we need to care more about. And the last thing is the awareness. Awareness is a very effective rule for the regulator or for the competition authority. The awareness is very, very, friendly for the market, and very effective to stop any anti-competitive practice. And this is what I saw from my, experience in the Central Bank of Egypt. Thank you very much for the invitation, and thank you for this very fruitful discussion today, and for the organization for sure. Thank you very much.
Thank you, Dr. Mira. Over to you, Kennedy, in maybe about 2 minutes.
Thank you. I also have a question. So maybe should I respond to the question a minute and the other take away a minute? All right. And what are we doing in terms of enhancing financial inclusion in rural areas? That's a question from Priscilla. There are a couple of things, but I'll just focus on one because of time. And what we're doing currently is to innovate around the rural population's lifestyle. And I think in most emerging economies, we have savings groups, the SACCOs, the VSLAs. Partly they have been digitized. So we are now banking on adding value addition services from the digitized community-based microfinance groups. And there are projects that we are doing. We are doing fin clinics to ensure that that particular segment is digitized for them to be able to get other services. The second level is digitizing some agri value chains, which most of the rural populations do have some specific value chains. There are seasonalities of agri businesses which need to be digitized. So I will just pause there, but all this is supported with a framework, a financial inclusion strategy, which earmark and recognize the rural area as a priority area. So, and it's in our website. You can see NFIF3 focuses on rural area too. In terms of a takeaway, I'll just focus on one. And I think this is part of the operational risk, which spills over also to AML CFT. It's not a new risk, but it adds into other complexity for regulators, particularly on the fact that when you now look at the expansion of new players, including cryptocurrency, virtual assets that are also coming into the market, some of them are purporting that they can add investment pools, they can add cross-border, they can add financial inclusion. And but again, they have other ramifications where we need to comply with standards. And therefore, I'll pause there by saying, for the regulators, we need really to open ourselves much. We need to build more capacity to be able to address the wave of change, which we see the benefit, but we also have to maintain the headwinds that may come out of that. And therefore, control, risk management has to be more robust on our side. Thank you. And thank you for the opportunity.
Thank you so much. Thank you. I don't know if we can give our panelists some virtual applause. They have done such a fantastic job. Thank you so much for agreeing to participate, for sharing all your insights. Greatly, greatly appreciated. We've talked a lot about the existing work that you're doing, about broken down what competition means in the DFS sector. We've tried to understand the tools that you're using presently, and we want to just give you a sincere appreciation. I'm going to hand over to Giyas, who's going to give us our closing remarks. Thank you.
Thank you so much, Anthea. A big round of applause to Anthea also, please, for expert facilitation and moderation, and also for leading all the good work that has taken place under this Competition Enablers Knowledge Exchange. Thanks also to the members of the Competition Enablers Knowledge Exchange, as well as partners and stakeholders, including our consultants, Acacia Economics. I would like to conclude with a reflection of the work done so far and the resulting meaningful impact, dear colleagues. We have been successful in creating awareness about this very important topic amongst our member country regulators. But beyond awareness, we have also built capacity, and we are currently supporting our members identify concrete approaches and tools to foster fair competition. And we will not stop with the publication of this knowledge product, colleagues. We want to take this work forward, and we want to deepen and scale this work by integrating competition considerations across broader thematic areas and supporting our member regulators in designing and implementing tangible, impactful reforms. The steps that we have taken so far, we are confident that they will enhance competitive, innovative DFS markets and support in expanding quality access and choice for underserved communities. On that note, I would like to thank all our speakers, panelists, and participants for your time and valuable insights today, especially for the ones in this part of the world. It's quite late here. So we really appreciate you taking time and joining us, even if it's late in the evening. And to help us, one final request we have, if we can go to the last slide, Anthea, to help us continuously improve our services, we kindly ask everyone to take a short evaluation survey and provide your feedback on this session. We will just take about 10 seconds for this, and then we will conclude. Thank you again for joining us today, colleagues. Thank you. For the ones who are unable to scan, I can post the link on the website, on the chat for you to refer. On that note, thank you again. Have a good day and good evening, colleagues. We will close the room now. Thank you.
Thank you all.
Thank you very much. Thank you. Bye-bye.
Thank you.
Bye.
Bye.
Thank you. Bye-bye.
Thanks, goodbye.
Thank you. Bye.
Thank you.